Okay guys, welcome to Intro to Short Selling. I just want to do a quick mic check, sound check to see if you guys can hear me okay. So type in chat here if everything sounds okay. It should be live right now. Okay, good. I think there might be a slight delay because I said that about 20 seconds ago. But as long as you guys can hear, that's fine. So I just want to welcome everyone to the class. So congrats on being a member of the Madaz Money crew. I think you'll be happy with your decision for joining us. There's a lot to learn in this course. So like I mentioned, it's a 12-week course. There's a lot of content we're going to go over. And a common question that I've gotten is this class designed for beginners or more intermediate traders? And the first two classes, we're just going to kind of breeze through the basics just so that everybody has the same foundation. So when I start talking about advanced topics, then everybody will know what we're talking about and be on the same page. So if these things that we're going to discuss in the first few classes are a bit redundant, you've already gone through them, just bear with us. I still think you guys can learn a thing or two because I still go over my layouts, hotkey settings. So even if you are an experienced trader, there's something to learn. There's something for everybody in these first few courses, but we do get into the nitty-gritty after the first couple of classes, so there's a lot of opportunities for you guys. So let's begin. So this is the introduction to short selling. So like I mentioned in chat, if you guys have any questions, just type them in chat, and if it's kind of a quick question, I'll answer it on the fly, but we will have some time at the end of each class for a Q&A. So just type them as we go, and then I'll assess whether it needs to be answered on the fly or at the end of the session. So intro to short selling. So what exactly is short selling? So it's the same as buying low and selling high, but you're doing it in the reverse order. So you're going to sell first and then buy later. So you're essentially taking a negative position. So most of you guys who've short sold before are familiar with this. You'll see in your broker, it'll say a negative sign and then the number of shares that you're short. So this tells you your negative position. So in order to go short, you actually have to borrow shares from your broker. And the majority of these stocks that we trade, these hard to borrow penny stocks, you have to pay a fee. So that's the biggest downside to short selling. I think a lot of guys are scared away from short selling because of the fees. But I've back tested all kinds of strategies in the markets, long strategies, short strategies, and I've found that the short buy strategies have more consistent patterns. They pay out better, the edges are higher. So I just see the short selling costs as a cost of doing business. If I could make that same amount of money going long, obviously I would, but I was never able to find that level of success as a long bias trader. So I've always been favoring the short side. So you want to buy low, sell high, that remains the same, it's just the sequence is reversed. So why small caps? Now the reason that I trade specifically small caps, and I'll go over the criteria that I like on stocks, but generally under 200 million market cap is the price range that I like to trade, and usually under $10. So the reason is the small caps are generally easier to find edges in the markets because you have to look at your competition. You're competing against guys who probably have similar experience level as you, similar bankrolls, therefore you can probably beat them in the markets. But if you're trading against hedge fund managers, algos, big money players, it's going to be a lot harder to make money because these guys have more resources than you, and they can withstand wider swings in the positions. They can bully you out of positions with their bankrolls. It's just a difficult game, so that's why I stick with small caps. Also, there's a higher percentage of human traders. There's less algo manipulation, although we have seen more and more of that recently as volume is kind of flooded into the small cap markets. There's generally more human traders so that the patterns are more predictable. Now, given that the liquidity and volume is a bit less, you can still make a decent amount of money. You can't make hundreds of millions like you could with large caps. And I've kind of reached a stage in my career where I've maxed out positions on some of these small caps. The liquidity just isn't there to support larger and larger positions. So there is a limit to the scalability, but I still feel like you can make decent money. And you guys have seen my tweets. You can still make some good money, especially in these markets now. There's a lot more volume. So there's definitely endless opportunities for you guys to make money. So don't worry about scalability. Now, choosing the right broker. This one is really important because for my niche strategy, you need to have the right broker. Otherwise, you're not going to get the locates that you want. You're not going to have the right pricing for those locates. And a lot of these brokers, they have very strict rules about borrowing shares. If you like to swing positions, they can buy you in at certain times. So you definitely want to have the right broker. So for my strategy, I recommend Centerpoint Securities as the #1 broker. They have slightly higher account minimums, so it's not something for starting traders. If you're a beginner, you can start with something like Cobra Trading. I believe they have slightly lower account minimums. And then Speed Trader and Trade Zero are ones that I recommend last. They're okay. I mean, they do have the locates that you need, but sometimes they charge quite a bit. Their fees can be quite high, but they do cater to smaller account traders. Now, Cobra has probably the best pricing of all of these four in terms of hard to borrow locates, but their inventory is sometimes limited. So they don't have 30, 40, 50,000 shares of certain tickers if you want to size up. So if you're looking for the best all-around bang for your buck, I would go with Centerpoint Securities because it gives you the most locate inventory, relatively good locate prices, and the executions are incredible. They have direct access, so that means you can route your orders to certain ECNs directly. And this is so critical because when I started my career with Trade Zero, they just have the basic smart routing. They don't allow you to route your orders to specific ECNs. And this is a major handicap. And the reason they do this is because they sell their order flow and that's how they make their money. But they only route it through one ECN, and I think it's Edge X. And you would always get the last fills at that price level. So let's say you want to short a stock at $3 a share. There's going to be 5, 6, 7 market makers sitting at that level, and only until all of their orders have filled will yours fill at that point. So you get the least priority of your fills. But with direct access through Centerpoint, Cobra also has direct access. You can direct your orders to the ECN directly, and that way you bypass the middleman and you get slightly higher priority fills. And that's a big thing, especially when trading with size, because if you'll notice that all of your top tick orders, you may not have full size on them, but all of your losing trades, you will have full size because those